Good morning, good afternoon to all the fellows who have joined us today. I am Abatu Mukiti, better known as Batu to most people. I'm a serial entrepreneur and have the blessing and the pleasure of starting and growing several businesses over the years, and a nonprofit advocating for girl education. I'm also 2014 MWF Fellow, and I was lucky enough to receive a grant in 2014 from the USADF. Um, Now, I've started several businesses over the years, and Mathemanics has been a great journey for me. But I'm particularly very interested in today's panel discussion because it's something that I'm interested in and something I want to get into. And so I'm excited to be joined by our amazing panelists today who have great experience in impact investment and with an interest in African businesses and change makers like yourselves. So I also have my friend and sister, fellow MWF fellow and US ADF grantee, Ajo Asari, all the way from Ghana. Welcome, Ajo.
Hi, Basil. It's nice to see your face again.
I know it always is lovely. Now, before we dig into our panel, I just want to have like a one-on-one chit chat with you, Ajo. Please, can you briefly share with our audience what your business does, the MWF Fellowship, what's Yali all about, so that you really, it's just a recap for everyone.
Oh, okay. Thank you so much, Basil. So, like you said, I was given or I was granted the privilege to be part of the MWF in 2016, and I also won the USADF grant as well. And it was a flagship program of the U.S. government for young African leaders in initiative, the YALI. And Yali was created in 2010. And just last year, during the pandemic, we celebrated our 10-year anniversary. And so on February 17th, the fellowship and USADF launched an exclusive course on grants management. And both of me and you, we received grants. So we were reached out to come help put the course together to help our fellow Yali, our alumni, anybody who is interested in going after grants and how to go about it. And I was one of the co-instructors for that program. So today it's been 3 weeks of this wonderful course up going. And today we are just going to put it all together and talk about our businesses, what we've done, where we started from, where we've been, pandemic pause, what we've learned, how we had to restructure and how to move on. And so I ran an ethical fashion apparel factory in Ghana, West Africa, and I started the free training school to train underprivileged girls, and we've trained hundreds, over 200 young women and men to learn how to stitch. Either they work for us when they finish, or they set up their own, or we recommend them for other factories as well. And so the grant I got helped to start the school, get the machines going, put the girls to work, get the things going. So yes, that's just basically what we've been doing, and we've done export orders through this wonderful network that I got through the grants. We've done export to Whole Foods and so many other places. So yes, it's been a wonderful journey. So yes, over to you, Batho.
I know, and a wonderful journey it's been. I've had the pleasure of working with you and acquiring some of your pieces, which I love dearly. So I'm really glad that you're part of this. We've probably had this conversation time and time again over the years. We've known each other over the various trips, that we've had together around impact investments. And you have been saying that you're interested in getting an impact investor into your business. And we've just been chatting about it back and forth with Michelle as well from the USADF, right? And over the years, we've also mentioned how you've had challenges with accessing funding because not only that you're a woman, but because you don't have any capital or any funding that you can hold on as surety, right? So that's why I'm very interested in today's topic that we'll be unpacking with our panelists, because really we are so fortunate to have these powerful people on the panel today. I'd
Yeah.
like to introduce you to our amazing panelists. Let's start off with Sangu Dao, the founder and chairman of Golden Palm Investments, an investment holding company focused on high growth technology opportunities across fundamental industries in Africa. He's also the MD of Africa Health Holdings, and I'm sure he's doing very well with the pandemic right now, a holding company implementing highly efficient and effective frameworks for Africa's healthcare systems. Secondly, we have Nick Faso, the co-founder of Price, an organization that supports new entrepreneurs who can distribute proven poverty innovations. Welcome, Nick. And then last but not least, our only female and beautiful lady panelist, Liuem Kafela, an investment director at Village Capital. I had the pleasure of meeting Liuem not last year, 2019, in Mexico, in Cancun. And so it's lovely seeing you again. Village Capital is a venture capital firm that finds, trains, and invests in early stage ventures, solving major global problems in agriculture, education, energy, financial inclusions, and health. So welcome to all our panelists. Now, I want to start off with each one of you. Sangu, Nick, and Liuem, please can you just share more about your organizations? I know Sangu and Nick, you both founded your VC firms and your prize awarding organizations. And Liuem, you work for a very innovative impact investor. Please can you just, in short, tell us what you do and what compels you to do the work that you do?
Sure. And first of all, it's wonderful to be here. Thank you for inviting me to this great program. I loved USADF and the YALI program in the past, was involved as an entrepreneurship judge. So it's really exciting to be back in this capacity. So at Golden Palm Investments, our big thing is we see a huge opportunity to build Africa's future using technology and innovation. And so we have backed some of the leading startups across the continent to do so. We were the earliest investors. We're the first investor in M-Pharma, which has gone on to do extraordinary work in the health and pharmaceutical industry. We were the earliest investors in Flutterwave, which made history yesterday. It's now officially a unicorn, which is really exciting also because, unlike, not to throw shade, but unlike Jumia, where there's controversy about, is this really an African company? Flutterwave is an African company started by Africans, serving Africans, started in Nigeria, where people will always talk about all the issues. And they brought in world-class investors, PayPal, Tiger Global, Visa, some of these extraordinary global investors. And so to me, that is a sign of the times, right? And the scale that they've been able to have, they've now processed over $9 billion in payments. And it's extraordinary, right? It just shows that talent is evenly distributed. It's opportunity that is not. And so that's what we're going out trying to see how do we get more farmers and Flutterwaves. Andela, we're also some of the earliest investors in Andela and Soko Watch. So that's what we're doing on the Golden Palm side, and we're constantly looking to see how could we be a catalyst and not just providing capital, but also making sure that we provide the right sorts of support to help create large, we want to create baobabs, right? We want to create these businesses that will be symbols and emblems of African excellence.
How exciting. How exciting, and how exciting for us to chat the day after this big event happening. And Nick, tell us more about Price and what compels you to do the work that you do.
Yeah, thank you for having me. I'm actually really excited to be on this panel and just connect with everyone listening today. So Price was started 8 years ago. We're a social enterprise, and we operate as a nonprofit organization. And so we do a lot of grant funding, primarily startup grants, so teams that just want to get a venture started. Our mission is all about impact. We believe that there are products and services that could serve a lot of people that are known to exist and known to have huge amounts of impact, but have yet to be distributed at scale to lots of communities. And so we come at this from a very impact-focused side. We think if we could distribute vaccines and great education curriculums and energy products to people who still need access, their lives would instantly be improved. Our interest in supporting African leaders is that we think that's the community that's going to drive this change. When it comes time to distribute vaccines to rural communities or education curriculums or these energy products, who knows better than the people from communities and from these operating regions on how to solve these tricky distribution problems. And so we give startup grants to anyone in the world, but primarily to dynamic leaders from Africa who want to solve these problems.
That really sounds exciting. I mean, I must tell you, Nick, I have been a fan of Deep Price from the beginning. And so it really is a great pleasure to have you on the panel today. Then Leon, please can you tell us about Village Capital? I know the first time I ever heard of it was through Michelle, I think 2 years ago. And Michelle has not stopped talking about Village Capital. I know Adjo can attest to this. Please can you tell us more about it and really what motivates you to do the work that you do within Village Capital?
Sure, of course. Yeah, so at Village Capital, we find really early stage entrepreneurs. And our motto is really we find, train, and invest in them. We see early stage entrepreneurs as really the best shot to be able to solve significant global market problems, specifically looking at those problems as market opportunities. For me personally, I'm Eritrean and I was born and raised in Kenya, so there totally is a bias towards building Africa and funding the entrepreneurs that are supporting that market and really have the opportunity to, what Sangu was saying, change the narrative and really build these African behemoths and African giants.
I couldn't agree more with you. And I think really Africa is a melting pot of just opportunities, growth, and wealth, right? And our continent having the largest number of young people and innovators, and some of them on this call today, it really is wonderful to just have entities like Village Capital investing into the African continent. Just a follow on to that, Liwe. African entrepreneurs, and in fact, all entrepreneurs, we always face with a challenge when it comes to impact investments, where we have to start thinking, how do we match our businesses to all the venture capitalists out there, right? Because what type of businesses do you find at VC? And how do you get to identify them that, okay, these are the right businesses that we want to align ourselves with?
Yeah, this is a great question because I don't think every business is a venture business. I don't think every business should be looking to raise venture capital. There are different kinds of financing that work for different businesses at different stages. How we've kind of demystified this is we came up with a framework called Viral that really helps entrepreneurs understand and benchmark where they are and what kind of capital they should be raising. It's actually pretty available to entrepreneurs. So if anybody wants to look it up, it's called ABACA, ABACA, by Village Capital, and you can go there and take the assessment. So it's a pretty easy process. We run our programs based on that framework to really help companies understand what sort of capital they need to raise before we match them with investors or before we invest ourselves.
That's really wonderful. And I'd like to pose to our audience, please, can you post any questions that you have for our panelists? They are really here to share as much of their knowledge and expertise with you. Now, over to Sangu and Nick. Sangu and Nick, both your entities are for profit. You're in it to make a profit, right? And I really just want to just touch on this because Sangu, you had a little celebration yesterday with Latsa. So maybe let's touch on that. With your entities being profitable, what's the advice that you would give to all our audience and all the other businesses really who will get to watch this later about the kind of things that you look out for the businesses that you invest in so that you can actually help them to grow to get to a point where they can also become a unicorn?
Yeah. So first thing I want to say is even though the way the venture capital ecosystem works, right? Even though we're for profit, it in some ways it's like the publishing industry, right? And there's something a publisher told me, which I'll never forget. She said, you need every Becoming, right? Or every Obama book or Michelle book to be able to create the returns that allows 500 other authors that you otherwise would never hear from, right? And so similarly, it's Flutterwave is it's just an extraordinary win for the tech ecosystem, right? But that win is what then allows the rest of the ecosystem to be able to fund the rest. And there's going to be a lot of failures. I mean, if you look at the success rate across the board, it's usually like a few big wins that will carry the entire portfolio, right? But that then creates an opportunity to allow for high risk behaviors and that sort of entrepreneurial innovation where eventually something will work. So I think that's important as a context. The other thing I'll say, though, going back to what my sister Luan said about saying VC is not for everyone, I'll even take a step back and I'll actually say entrepreneurship is not for everyone. And I think that I try to, I think we've over romanticized it, right? And we cannot entrepreneur our way out of all our problems in Africa. We just can't. You cannot entrepreneur yourself out of governance challenges. You cannot entrepreneur your way out of some of the infrastructural challenges. So we also need to there needs to be a reckoning. Entrepreneurship is hard, right? And there's a whole section of mental health that we won't even get into, right? The solo situation of an entrepreneur and the repercussions of that, right? It's very difficult. So I think there has to be that honest reckoning first and foremost to say, look, is this really for me? Why am I truly doing this? And that leads to answering your question of what do we find or who are the sorts of people that we want to back? And part of that is those entrepreneurs that you see who are so driven by the problem they're solving that they're just going to go through all the walls. And you need that sort of attitude anywhere in the world, but you need it especially in our part of the world, right? Where the reality is we just have challenges, right? I don't know how long we'll be able to have this panel with the lights might go out. It's been happening, right? These are realities. And so given these sorts of challenges, you need a certain amount of tenacity to survive in our markets, right? Also keep in mind that our markets are quite small and very fragmented, thanks to the folks at the Berlin conference who divided us when no one like me was there. But that creates a situation now that to create any markets to compete on a global scale, you almost necessarily have to go Pan-African, which in the early stage creates this economies of scale, right? So it also means that the problem you're solving, for it to be attractive, to match that for village capital to say, let me invest in this business, vis-a-vis opportunities in other parts of the world, you need that scale. So those are two of the things that I'll say would be pretty pertinent for people to think about.
Mm-hmm. Sue, Sangu, thanks for that. You did share a mouthful, and I need to just tell you, everyone's heads were just bobbing up and down. So we agree. And in fact, I had load shedding earlier this morning. So when you spoke about the electricity, I was like, I can relate. Now, Nick, when it comes to you and with DPrize, what are some of the things that you look out for, and what advice would you give to the fellows listening today on just impact investing, and if they are interested in applying with the DPrize?
Yeah, I think it's interesting. I think all of our panelists here today are focused on this idea of venture building, which is a very, very specific set of supporting businesses. I think we're all looking for these really big, rapid growth ideas that could start small, but will eventually, hopefully quickly, impact a lot of people. And so we actually operate as a nonprofit organization. So we don't take a profit from the work we do. Our funding is primarily grants. We're still looking for a lot of the same things that somebody like a venture capitalist would look for. So for people applying to DPrize and people trying to build large ventures, I'd say we look for three things that are really critical. We look for what I call relative trajectory. Given where you are right now, how quickly are you going to grow? We focus on really early stage entrepreneurs. A lot of our entrepreneurs are first time and at the idea stage, they haven't launched. And so for us, the trajectory is, well, what have you done in your past jobs or your past roles? Even if this is your first job, if you were the leader of a student club, what did you do while you were at that student club? If it's incredibly impressive, then we get very excited. So we're looking for people that are driving results and doing more than their peers. It gets back to Sangu's point. This isn't about just building a successful company. This is building a company that is so successful that it will support 500 other failures and still pencil out and look good. So the bar is pretty high. I'd say something else that we look for is just a good roadmap. The startup grants that DPrize provides are relatively small. It's $10,000 to $20,000. It's generally enough so that you can run 3 months of operations and basically run a small pilot program of whatever this big, bold vision is that you have. And so we're trying to understand, what do you need to prove in this small amount of time to show that this vision makes sense, to show that it's worth throwing a lot more money at it? And what does that whole roadmap look like? I think the stronger that roadmap is, the more excited we get. And the third thing I'd call it is just a commitment. entrepreneurship is hard. It's very, very hard. And to be successful, I think a requirement, like a bare minimum requirement, is you throw everything you have at it. And so if there are people that are working on other jobs, or they're trying out a few ventures at the same time, and they're just spreading themselves a bit too thin, it's hard for us to get really excited about. We want people who believe in this idea so badly, they're going to give it everything they have.
I agree, Nick, and Sangu also alluded to it earlier. Entrepreneurship is hard. I've been an entrepreneur for 19 years now this year, and it doesn't get easier, right? But it's the thrill of it that makes it so exciting. I still would do it over again with all the heartbreak and all the disappointments, but also all the highs as well. Now, we know that nothing's for free in this world, right? So I guess the one question that most of the fellows have, and everyone really has, is what are the T's and C's that come with the grant, whether it be the grant, whether it be an investment? Is it convertible debt? Is it equity? Is it something else? Maybe let's start with you, Liuam. Can you really share with us what's in it for Village Capital?
Yeah, so I think the terms and conditions kind of depend on the investment instrument. So even things like grants will likely require you to collect and report some sort of impact metrics. So that there is kind of a condition there as well. In terms of what we do, we typically do convertible debt, equity, debt, or revenue share. And each one of those has a different profile and fits like a different stage of business. I think that the big thing, or the big takeaway with really terms and conditions, is make sure you understand them really well before you get into any sort of investment. If that means, and ideally, obviously, your investor will be friendly and open to helping you understand what the terms and conditions are of what you're signing over. But that's super, super important to know what you're getting into. Convertible debt makes sense probably at the earliest stages, and now safes have been normalized as an early stage instrument as well. Grants, if you can get them early on, are great to help de-risk the business and build your minimum viable product without having to take on any debt before the company is making any revenue. Equity tends to be a little bit after convertible debt, so usually that's when your company gets its first valuation, its first sort of price. And then we do revenue share and debt, which is a little bit non-traditional for a lot of venture type firms. And that really helps companies that need working capital or that are growing and profitable and sustainable, but don't have access to capital. So we kind of take more of a hybrid approach, but absolutely understanding what the terms and conditions are before you get into any investment is essential.
Okay, that's great. And I think it's I like the way you also have broken it down, because sometimes it's not all about the money, right? It's also all the support that you give to the entrepreneurs in order to help them to grow their businesses. Nick, can you also explain your T's and C's, please?
Sure. So we offer a convertible grant agreement as our funding. And we do this because we invest at such an early stage. We're typically the first external funder that someone will talk with to get some funding just to get off the ground. But actually, I think that advice was great. Like I would tell everybody, no matter what business you're in, go after grants first. It doesn't cost you anything in terms of your equity or your debt. There's a lot of grant funding out there. And I actually think, especially for businesses just starting out, where the future is so unknown, your revenue is so unknown, your operations are still forming, it's exponentially harder to convince an impact investor or somebody who's looking for a return on that investment to invest in you. I think grant funding is exactly where people should be starting out.
That's actually very interesting, because I guess that's what makes your entity so unique from everyone else on the panel, is that you're non-profit, and so you would obviously then look for different things. Sangu, what are your T's and C's at your entity?
Yeah, so I think for us, first, I just want to make a quick comment on what Nick said about grants. I agree in general. I think the grants can be a great non-dilutive way to get you started. But I also think that I'll exercise a bit of caution in the sense that what I've found, and I even saw this among some of the Yali winners that I was mentoring, was that it can sometimes create a situation where you're following grants and you lose your vision because you are now trying to adapt your company to suit the terms of those grants, as opposed to having your clear vision about what you want to do and finding capital that will match that. And that's the beginning of the end of your business, because you find yourself in no man's land where you're constantly trying to pivot to meet the terms of grants, which will evolve over time, and you can't fit your vision. Instead, you need to have a very clear vision that this is what I want, right? And have the patience to meet the right sort of capital that will match you. Because capital is, whether it's grants, whether it's debt, whether it's equity, it's a bit like marriage. And divorce is very expensive. So you need to be very careful who you marry when it comes to the capital table. And not all money is equal. So that's one caution I'll say. People need to be quite thoughtful. You want to make sure there's an alignment on values, there's an alignment on vision. You want to make sure when things go down south, what sort of investor is that person going to be, right? And how actually are they going to be helpful? Because even though, yes, across the continent, if you look at the data, there's a massive gap between the demand for capital and the supply of capital. However, for the very top businesses, the reverse. There's too much capital chasing very few if you're top of your game. All the companies I mentioned, Flutterwave, M-Pharma, Soko, all their rounds, every single round they've done has been oversubscribed, right? Because if there's that clear value you have, and people know, he or she is an extraordinary entrepreneur, you have some leverage in being able to set the terms. So that's something I want to encourage people to make sure they do.
Essentially, sorry, Sangwa, I just want to jump in, because essentially that investor will be your business partner going forward, right? And you want to know that you are in business with somebody that you share the same values with, right? And knowing that you want to actually maintain a long-standing relationship with them, because we've seen how things have gone bad between investor and the business person, and it really isn't pretty at the end. So I had to add that in.
And for us especially, I mean, what we really push for is, we're not as big as some of the other VC firms. And so because of that, we have to almost be surgical in how we do our capital. So we also treat it as married. We do a lot of research. We want to know, I'm not just going to look at your numbers. I want to know things like, where is the person from? What does she mean to them? I'll ask you weird questions like, how often do you call your mother? Right? Because I want to know you as a person, right? If we're going to be in this journey.
That's important.
Yeah.
And then for us, once we get in, we see ourselves, we like to get in early because we see ourselves as we're now going to be your strongest defenders, right? We're going to help you navigate. We're going to make sure that when the big boys and big girls come in, they're not going to give you term sheets you don't understand and confuse you. So we really see ourselves as, once we get in, we become the knights for the African entrepreneurs, and we fight for them.
Yeah, like you were saying, I think Bartho knows me, and choosing the right partner, or like you said, like it's a marriage. When I got the first and only grant from USADF, I said no more. I don't want any more grant funding, and I wanted to build the business and make profits and see how it grows. And so from 2016, I haven't gone for any grants, and anybody that comes, even for a venture capitalist or anybody else who is interested in the business, I always want to listen to you. What are you bringing on board? I just don't want money thrown at me. What are the other things that you can bring on board? Because I would say I've been privileged to be in my little corner where I've had people, equity investors, reach out to me. We want to invest in your company. I'm like, okay, yes, you can't throw money at me. I just don't want money because I'm into impact. That's impacting underprivileged girls in my community. At the same time, growing an industry, that is the apparel industry in Ghana, making it really big and wanting to compete with the Asian world. So I have been at that stage where I've had to say no to 3 equity investors. And sometimes when I think about it, it's like, wow, it's not easy to say no, see the money, and say no, it doesn't fit. So yes, I agree with you completely.
Thanks, Ajo. Thanks for sharing that story. It really is a story that a lot of entrepreneurs can relate with. And I have some questions from our audience. So maybe let's start with Nick. There's a question for you, which says, when is the next D-Prize application period?
Good, easy question. We're opening up in about 3 or 4 weeks, so very soon. I would encourage anyone who's interested to just go to our website. You can sign up on our email list. We only email people an announcement when we launch our competition. So it's, you know, a couple emails a year, and you get an announcement when we go live.
So no time like the present, right? Great question, because it opens up soon. And then I also have a question for you, Sangu. It says, how on earth did you make it in a country like Nigeria, and where more innovation and active startups are present? How did you go with those challenges? So I think what this person's trying to say is, how did you get to choose the businesses that you chose to invest in?
Right. So Nigeria is a very special place. Nigeria gets a lot of flack, but I love Nigeria. And I love Nigeria because it's one of, I've now spent time in about 47 African countries. And the sort of entrepreneurial energy and dynamism you see in Nigeria is unparalleled. There was a quick story to illustrate this. A good friend of mine, Bright Simmons, was in Nigeria, landed, was in traffic, and someone tried to sell comb to him. And Bright Simmons got annoyed because, you know, he's bald, and was just like, what are you doing? What am I going to use this comb for? And the guy, without blinking, said, oh God, that'll be the problem. I get wigs for here. And took out a bag full of wigs. I was ready to sell them wigs, right? And I just love that story because it just spoke to how just entrepreneurially minded and nimble and adaptive Nigerian entrepreneurs are. But to address the question of, at the end of the day, I always say that where there are lots of problems, there are lots of opportunities, because these problems are basically opportunities waiting for solutions. And so a lot of, if you look across the board at our portfolio, every single company we've invested in has been a company that is solving a major problem. And then they're then able to figure out, how do we create a business solution around that, and how do we create a competitive moat to make sure that, you know, no one else can do it as well as we can. So whether it's M-Pharma that says, look, across the continent, people are paying 200 to 300% more in drug pricing, right? So if Pfizer makes a drug for $100, the African consumer ends up paying $200 to $300 because of the fragmentation. So then they now come out and say, okay, let's use our technology to aggregate everybody, the small moms and pops pharmacies, and then we'll use that purchasing power to be able to bring down the pricing, right? It just makes sense. It's good for the consumer, it's good for business, it's good for everybody, right? Or Flutterwave that just says, we have $400 billion in non-cash payments, and we have every single bank has its own thing, and all the different mobile money. They said, look, why don't we just create one API that connects everything together so that you can send money across any platform across the continent, right? Simple idea that solves a very real issue, and that now unlocks. During COVID, they launched the Flutterwave store, and they suddenly created a situation where SMEs can suddenly go online in 5 minutes, right? That's the sort of stuff that is that we're looking for. You know, if you can solve problems, whether it's and real problems, you realize that the Naira can devalue, all the nonsense can go on, but if you're solving a problem, the consumers will be out there and they'll pay for it.
Because essentially, as business people, what we are, I always say that we're problem solvers, right? And that's what we do every day, is that we're constantly solving problems. I have another question here for Liam. It says, which funds are available out there to assist social enterprises dealing with the negative financial impact due to COVID?
Yeah, that's a good question. There were some COVID response funds that got set up during the pandemic. I think what happened right when the pandemic hit was there was a pullback in terms of how much investments people were making, because everyone was doubling down on their existing portfolio. But I think that trend has started to reverse. So now there's a lot more options and opportunities for people to fundraise significantly. So I think last year that was such an issue and was such a big sort of theme that held the ecosystem back a bit. But I think now there's a lot more capital that's reverting and a lot more investment that's going back to where it was.
And just to follow on to that, Liam, what real world problems has Village Capital invested in the past few years?
Yeah, sure. So we have, I guess, if I were to spotlight one of our portfolio companies, although we love all of them and all of them are great and special, PiggyVest in Nigeria helps millennials really save and invest for their future. And that has been such an interesting journey because we partnered with them really, really early on. And the team is amazing, and the work that they've done is amazing, and the impact that they've created in their local ecosystem is fantastic. And so financial security is obviously one of the sectors we're paying a lot of attention to, and really planning for your financial future and your retirement and all of that is extremely, extremely important, especially as we're in a market where, you know, loans and microloans was all the rage a few years ago and resulted in a lot of defaults and a lot of people in precarious financial health. So working on savings and investing and educating people is super, super important. So I'll spotlight them, but I will caveat it with we have a lot of portfolio companies that we love and that are solving, all of them are solving major problems.
Yeah, and I like that. I really do like that. And just on the topic of problem solving, Nick, I want to bring you into this conversation. Where do you see the sector, this particular sector, or your sector evolving in the future, in the types of sectors that you are focusing on and investing in? And I think COVID's just come in and changed everything, right? It's shaken a lot of industries. And so where do you see your sector evolving post-COVID? And when I say post-COVID, who knows how long COVID we're going to be in the state for? It could be this year, could be next year, but where do you see it evolving? Or how?
Yeah, you know, I think so. DPRIZE works in a lot of sectors. We're across about a half dozen different sectors, and the thing that ties everything together is we're totally focused on the delivery and distribution method of whatever that intervention is. And so the changes that we've seen with COVID, we've seen a lot more companies digitize parts of their business, and sometimes that's the delivery of whatever they're working on. So if you're an education company and schools shut down, you had to figure out, well, how do we still reach our students? And digital was the answer for a lot of people. But even organizations that are selling products that can't be digitized, so a solar lamp, they needed to figure out how do you manage inventory? How do you make payments? A lot of that is going digital too. So I'm seeing a lot of that. But ultimately, I think long term, even well past COVID, I think distribution and delivery is going to be this really critical problem that needs to be solved. And and I actually think that this is kind of this is something that not a lot of people talk about. I actually think there's this misconception that being an entrepreneur is taking huge risks, and us being as investors and grant funders, we take huge risks. And I actually think it's the opposite. I think that at least where we come from at DPRIZE, we're looking for teams that have really low risk ideas. We want someone who says, look, this is a proven product or it's a proven service. We know that there's high demand for it. We're using a delivery or a distribution model that's worked in other markets or other countries or in other sectors. And we're really just focused on solving a pretty core problem. To be honest, some of our best successes are teams that just really focus on developing a great sales team, or figuring out how to do their inventory management really well so that they keep their costs low. Like, the innovations don't have to be these big, sexy technologies. It can just be focused on solving a really core problem in the operational model. And that's what drives a lot of success. So in terms of the changes I see happening, I think we'll see some changes like digitization. I think we'll see people entering new markets, especially as populations have kind of shifted back home. But overall, I think a lot of these problems have been around for a long time, and I think they'll continue being around for a while. So, for everybody on the call, I'd say really figure out what that one small opportunity is. Focus all your energy on solving that small problem, and everything else, try to borrow from ideas that have worked and de-risk your idea. It makes it really easy for us to jump on board.
That is really true, right? Because an innovation can happen over and over again, right? It's just finding a better way to do what somebody else has already invented. Now, I have another question, and I think I'll tie these two together. I guess they're for me. It's around the USADF grant. And that does it fund early stage entities? And I mean, this is my 6th year having a relationship with the USADF. And when I was funded in 2014, my business was at early stage. And so it definitely does. And I know Ajo's was also at early stage. So it definitely does fund early stage businesses. And I would urge everyone who has any questions around the type of grants coming out of the USADF to go to their site, which is www.usadf.gov. And there you'll see all the grants available and what type of industries they're funding or what type of industries they're focusing on at that particular time. So that's what I've got to say about the USADF. Now, there's a question here. I think what I'll do is I'll actually pose it for you, Liam. So let's see. It says, and I'll give you some context to it. It's a fellow, cohort 41 fellow, and I think maybe it's 14, David Totek. He is passionate about advocacy on human protection and fair representation of youth and persons living with disabilities and Indigenous communities. And he wants to know, how does one apply for grant funding that focuses on good governance? So he wants to use this funding for good governance. So I don't know if any one of you want to take that on.
I would almost pivot it to Nick. I think that's a Nick question.
Yeah, so DPRISE does do some work in governance and sort of public service and transparency. And so I'll do my best to answer this question. You know, I would look for grant funders who first are in that sector or in that space, and especially when it comes to public service delivery, government transparency. That's kind of a very specific set of funders, especially on the grant side. Like, I think when it comes to that type of impact, the grant dollars are probably going to be where it's at. So finding organizations that fund that type of transparency work, you know, I think they sort of like, when you look at their website, you either know that they're into the sector or they're clearly not. And it's a little more black and white than some other sectors. So I would start by building up a huge pipeline of possible grant funders that do that type of work. And I think a good start would be to see who's funding other organizations that are doing that. So there's the Accountability Lab that does some transparency work. There's a group called Policy, which operates out of Uganda. And there's a bunch of others. So I would just check out who's funding like-minded organizations. I think when it comes to advocacy and policy, one of the tricky things is proving impact. It's much easier to say I delivered a vaccine to a child, therefore there's impact, than it is to say we ran an advocacy campaign and there's impact. The numbers just get much more gray and much harder to tie together. So I would say that's kind of a challenge with that. So I would either work really hard on that problem and figure out how you can prove that you're having impact, or seek out funders who understand that it's a complex, complicated sector and it's harder to tie those impact numbers down. You do see kind of a span of grant makers, people who really, really care about the numbers, really, really care about proving impact. We're a little bit more on that side, all the way to folks that understand that there needs to be some flexibility there. So the last thing I'd say, and actually this kind of goes across with a lot of the teams that we work with, fundraising takes a lot of effort. So we ourselves are 100% grant funded, and I spend about 50% of my time fundraising. And so if you're spending 30 to 50% of your time fundraising, that's probably a pretty good spot until you raise your budget. So it takes a lot of effort. And the other thing that I'd say is talk to a ton of funders. You are going to hear no 100 or 500 times before you get the right person. So if you're just applying for a dozen grants, the numbers just aren't there. Like, talk to lots of people, get your face in front of a lot of folks. And it's, you know, it's kind of like a marriage. You're going to have a lot of conversations with a lot of people before you find that right person to support you.
I agree. So just around the impact measurement, I mean, I work in impact measurement, and proving impact is really a difficult thing. And it's something that you need to plan from the beginning. And it's a topic that we unpacked fully and quite intensively in the grant management course that we did for IREX. Now, Sangu and Liams, I see that you dodged that bullet, but here's a difficult question for both of you. Now, there's a huge question around how much money are you actually investing into these entities? And I want you guys to like throw dollar numbers around so that we get an idea of just how much money are we talking about here? What's been your biggest investment? And what's the range that you invest in? Ladies first.
Okay, sure. I think with our initial check, so typically we're the first institutional investor into a company, and our initial check has historically been 50 to 100. And then we will opportunistically evaluate follow-on investments of up to 500K.
And Sangu?
Yeah, so there's been a bit of, so I'll say initial check size for us, I'll say from about 25,000 to about 250K. In terms of follow-on, we can build as much as up to $5 million in follow-on capital. But a slight pivot. So I think early on in the beginning was where you might put maybe $50,000 checks here and there. I think we're trying to do less of that, even where the company, what we found, if I look back, this September, October would be about 15 years of doing golden power investments. And if I look back, and which we have to do an analysis of, what's helped companies succeed and not, you find that unfortunately in our part of the world, it's not just the best ideas that win. It's the best capitalized ideas, right? Because that allows you to be able to make mistakes, pivot, COVID happens, and you suddenly have the capital to actually be able to think strategically. And so what we actually think it's a disservice. We actually, especially early on, we like to inject a bit more, right? So if we want to make sure that you're well capitalized, and not only are you well capitalized, but that so part of what we do is not just investing, but seeing who else can we bring on the cap table, where if there's an issue, they can help sustain this business, because you need all the companies that aforementioned that whether it's PiggyVest, whether it's Flutterwave, whether it's M Pharma, Soko Watch, all these guys, extraordinary entrepreneurs, great ideas, but they were also very well capitalized ideas, right? And so that's also what's enabled them to win in this ecosystem.
I think one thing I would probably add to that, or emphasize to what Sangu said, was having investors invest along with you, especially like relatively early on after your first check when they're raising their first formal round. It's so important. To his point about well-capitalized ideas winning, it's great to have more than one investor on the cap table. So in case things start to go south, you have more than one person to go to be able to give you emergency funding to get through a pivot or whatever sort of hurdle that you go through. So I think that's extremely important. I also agree. I think the ecosystem has changed. So I think before, like writing those 50K checks and stuff was enough in the early stages, but now the round sizes are getting bigger, and people are really starting to raise more and more and more capital. So there is like a pressure to write bigger and bigger checks as the companies grow and as the competitive landscape as well grows.
That's true. The ecosystem is changing a lot. And just to follow up on that, Nick, and really this is a question to everyone, but we'll start with you, Nick. What's some of the advice you'd give to some of our African entrepreneurs listening on and your grantees around just what they need to be doing right. So you've probably gone through so many grant applications over the years, right? And you've picked up on some nuggets and some points over the years that you think, oh, not good. So what's some of the tips that you would give to them as to what they need to be doing right going forward?
Yeah, good question. There's so many things. I think that's one of the tough things about being an entrepreneur is you're really juggling a lot of things all at once. And you're trying to make everything work. For us, we come in again at this very early stage. We're usually the first $10,000 or $20,000 that a team receives just to get their idea off the ground, right? Just to run it for 3 months and see if it even makes sense. See if this business plan written down on a piece of paper is worth doing. Usually the teams that come out of that first pilot period, the ones that are doing the things right, they do have a couple of things in common. So most of them have focused really specifically on like a learning goal or validating a part of their model. So, let's say you're selling solar lamps in a new community. And let's say you've decided that it's all about lowering the price point. And if you get the price low enough, you think demand will be there and you'll make a lot of sales. They've focused all their attention on just proving that lowering the price point will do exactly what they think it will do. So all their effort has gone into that. Or whatever you think the model is, like you've just really, really focused on proving that. And with that learning, those teams can then go on and raise more capital. They can go to the next funder and say, we've validated this part of the model. We know it's starting to work. This is the next thing we need to validate, and we need support to get to that next run. So kind of having that roadmap and working your way up it is how we see teams scale really well. The second thing I'd call out, and the others have touched on this too, it's not about just having the best idea. It's being able to capitalize on that. It's being able to raise the funding for it. And so focusing on your story, on your pitch, on your pipeline, and getting your face in front of donors or investors or whoever is supporting your business is really, really critical. I think a lot of people could spend a lot more time building those relationships up. And that's what they are. These are relationships. You have to nurture them and you have to invest your time into them. It's actually, this is a mistake I made early on when just starting with DeepRise. I thought it was very much a business transaction. We get a check from a donor, we deliver impact and report on an annual report, and we're all happy. And that's not how it works. My fundraising has exponentially improved by sending monthly updates. And it could just be, hey, here's what's happening in the office, or here's some pictures from some of the work we've done. This is a cool thing we're dealing with, or here's a problem we're facing, and I want to tell you about it. Those types of conversations build the relationship, and it makes it so that people want to continue supporting us and they don't want to walk away. So those are the things I would focus on.
I think you've really shared some great tips there, Nick, because you actually play the double role, right? You are an investor and you also receive grants. So it's been nice for you to share those points, because all the entrepreneurs are also grantees and they're looking to get grants from entities like yourself and the USADF, etc. Now, Liam, maybe you can share with us what's the one thing that you'll be doing differently to finance African entrepreneurs going forward as Village Capital?
I think one of the things we've thought a lot about is what sort of instruments work well for different ecosystems and for different business needs and different stages. We've been able to invest debt as well as convertible debt and equity in Africa, but we're starting to see there's a lot of appetite for instruments like debt that are non-dilutive for companies as they start to grow and scale. So one of the things we're doing right now is just analyzing which instruments work best for that. I really think it's always going to be a combination, maybe not one firm doing all, but we need different kinds of instruments and different kinds of capital available in the ecosystem in order for businesses to be able to grow and thrive, because not everything can be funded with just equity. So we're definitely pioneers in doing some soul searching and thinking through like what sort of instruments make sense for what business. So I think that's work we're going to continue to do. For me personally, I would love that we do just a combination. If you could pull off a combination of vehicles, that was like, okay, one that is just debt or working capital, and then one that is, going to do convertible debt equity, I think that would be super impactful, and I think that would be super meaningful to the ecosystem. But yeah, we continue to iterate on what instruments make sense for the market.
And Sangu, what is the one thing that you're going to do differently at Golden Palm Investments when it comes to investing in African entrepreneurs going forward?
Yeah, so look, this is a big thing with the industry that has to be named, right? We have, there's a big issue in terms of the gendering of the inequality, right? And if we take a step back and we actually analyze it, it's not, so if I look at, let's say, the pipeline, right, in terms of inbounds we get, we actually run some analytics on it. 97 to 98% of the inbounds we get are from male entrepreneurs, right? The other thing also is if a lot of times you say, maybe I want to invest in a business that gets to, let's say, $1 million in annualized revenue, right? Which is often a metric that a lot of VC firms look at. The problem is, to get to that stage, there's an inequality prior to that, because the access to those earlier checks, right? There's a gender in there when you dig into the data. And so you might come up with a gender neutral policy that just says, I want businesses that have reached $1 million in annualized revenue. There's nothing explicitly gendered about that. But because of the gendered inequality and the steps to get there, you are inadvertently reproducing that gendered inequality, right? And so what we have to do differently is to take a step back and incorporate the gendering of the inequalities in the journey of entrepreneurs and factor that in to say, okay, you cannot just come up with what is seemingly gender neutral, because in effect, you're reproducing those inequalities. And so what we're starting to do very differently is to contextualize it. And the same also even goes for entrepreneurs, right? So the entrepreneur who is Harvard and Oxford educated has access to transnational social capital, right? And I cannot see that entrepreneur who has his MBA and knows how to talk very nicely and look at that person who has amassed a certain form of cultural capital and give them that same assessment as a different entrepreneur who may not have had the same sort of opportunity. But we know from the education industry, and we know from these schools, that once you give people opportunity, talent is everywhere, right? And so it requires us to, almost unwet some of the biases that we have, right? And to say that, how do we actually come up with ways in which we can interrogate those biases, be self-aware of them, and ensure that we're truly creating opportunity for everyone. And I wouldn't even say meritocracy, because meritocracy is fake. There's never been a meritocracy, right? Merit has always gone to the privileged. So let's throw out that word and let's say that, look, how do we actually ensure that we're going to provide capital, and we're going to contextualize all the analysis to ensure that we're looking at people and judging them on the basis of the cards they've been dealt with.
Preach, Sangu, preach. I really, really loved everything you said. Really loved everything you said. But I know all of you want to hear more from our panelists. So I'm actually quite excited to share with you that you could actually stand a chance to get half an hour of their time and hear more preaching from Sangu and more nuggets of information from Nick, and then also just for more wisdom from Liwem. So I really would encourage you to do that in a post survey that's going to be sent out after this panel discussion. But to wrap it up now, and that's like in a minute, really, what's your final words of advice to our audience this afternoon, this morning?
I'll start it off. Words of advice. I'd say just be confident in what you're doing. You'll have funders, you'll have people like me that ask you tough questions that will tell you you need to do something different. Stick to your guns. Do what you think is right and be confident in your idea. question yourself. Make sure that you're, still on a path that makes sense. Like, don't be afraid to make changes, but do it because you believe in those changes, not because someone told you else.
Leroy?
Yeah, no, I love what Nick said. I think understanding and acknowledging that what you're doing and what you're trying to do is really, really hard. And there will be a lot of downfalls. There will be a lot of down days. And I think with all these success stories that are starting to come out that are so inspiring, acknowledging that they take time to build and it's really hard, right? Everybody has like difficult days and difficult things that they have to navigate. So don't give up hope, or don't look at what other people are doing and say, I can't get there, or I can't do this. Acknowledge that it's going to be hard and you can work through it. So I am super inspired by all the entrepreneurs that are building on the continent. And I think that there's a new generation that's coming now. And so I would just give the advice to keep persevering and do as much as you can.
And then last but not least, Sangu, why don't you just take us to church and wrap this up?
So my advice, I'll say, is look, we've spoken about raising capital, but the most important capital is you. It's human capital, okay? The journey is a tough one. As an entrepreneur myself, I ended up going public a few years ago in a TED Talk about mental health, where I was crippled by it. Right? Because you put a lot of pressure on yourself. I'm a Yali fellow, I'm this, I'm that, and you set all these expectations. And sometimes we forget to take care of our mental health. Your business will not survive if you're not doing well. And so in as much as that you want to be resilient and persistent and ambitious, and you should do that in the context of making sure that you take care of your mental health. You take care of yourself. It can be lonely. You want to check in, make sure you have a good support network, and you want to ensure that you're at your very best, because nothing is worth it, right? You have to take care of here to be able to then go into. It's like on the plane, you have to put on your oxygen mask to be able to put on someone else's oxygen mask. So please, if there's anything you take away, please make sure you take care of yourself, you take care of your mental health, you eat well, you sleep 8 hours a day. Don't do that 4 hours, I'm an entrepreneur. No. Sleep well so you can think productively and live your life with love, with openness, with joy, and the rest will take care of itself.
I mean, come on. The woman just snapping fingers here, drops mic. And I think I can't top that in any way. So I'd love to really thank all our panelists for just really being amazing and just dropping so much wisdom. I mean, come on. I don't know what to ponder on. You've given me so many things to ponder on. And my day's about to end. And now you just wanted to just begin with you. But thank you so much to all the panelists. But I also want to thank our audience, our alumni audience. Don't forget to apply for that half-an-hour mentorship time. This is open to all our alumni, only our MWF alumni. So please take this opportunity on and really, really take it on. So I wish everyone all the best and see you next time.